remains normal?
So first half of this year, if you want me to tell you the season, it is expected to be normal. But because of this drought situation in Karnataka and Maharashtra, government asked us to produce more sugar during this season. So the sugar production is higher than the ethanol production, and they expect it to be higher only in the sugar side. So ethanol production will be less. But in the coming season, hopefully the things will be normal.
So, sir, that's what in FY25. What do you think would be ballpark sugar production and ballpark ethanol production?
I expect it to be somewhere around 2 lakh tons of sugar. It's about 6 to 7 crore liters of ethanol.
Okay. Thank you, sir. I'll come back in the queue.
Thank you. The next question is from the line of Aditya Surana from MSEC. Please go ahead. Hello, Aditya.
Hello.
Yes, we can hear you.
Yeah, thank you for the opportunity. I just wanted to know about the volume and revenue split between yarn and fabric.
Sir, you are giving me. Sir,
hello.
Yeah, tell you, sir. Volume, yarn 19,000 ton, fabric 2,000 ton. Value, yarn 496 crore, fabric 56 crore.
Okay, and what is the production number of sugar and ethanol in FY24?
Sugar production in 24, 176,000 tons sugar, 9 crore liters of ethanol.
Sorry, for ethanol?
9 crore liters of ethanol.
9 crore. Thank you.
Thank you.
Thank you. The next question is from the line of Vineet Nambu from HSBC PMS. Please go ahead.
Can you hear me?
Yeah. Tell me, sir.
So the thing, for FY24, the average realization per garment is around 170, right? 170 rupees. So this would be, for the FY25, this would be the run rate, or would you expect it to improve?
Sir, the basic prices are more or less the same. When if the cotton prices fluctuates, it may vary little. Otherwise, expected to be the same line.
So you are expecting it to be in around 170?
Yeah, 170 rupees.
Okay, that's it.
Thank you. The next question is from the line of Lokesh Manik from Valam Capital. Please go ahead.
Yes, good afternoon, sir. Am I audible?
Yeah, you are audible, sir.
Yes, sir. So my question is on the UK FTA. So just to understand, if India goes through with the UK FTA, does this give you access to the European markets in terms of if we have to go directly through EU FTA? So would you be able to service European markets through the UK FTA route with the brands that you are associated with or the customers that you are serving?
We have to see the final form of the FTA. Then only we can comment about it.
But would there be any inter-country duties between UK and EU if it is supplied from India?
Yeah, we have to see that.
Okay. That's it from my side, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Amruta Sane from Wealth Manager Indian Private Limited. Please go ahead.
Yeah, thank you for the opportunity. So I have two questions. First is regarding the garment capacities. As in right now, we have 157 million garments capacity, which we are increasing to 170 million garments per capacity, right?
177, correct.
Yeah. So after this, do we have any scope for any further brownfield expansion, or will we have to do greenfield expansion there?
More or less, the brownfield expansion will be completed. Then there are going to be the new capacity only.
Okay. My second question regarding the ethanol, another sugar segment. As in the ethanol sales are right for FY24 are around 51% of the total sugar segment. And we see that the margins also have increased in the sugar segment to say what 24%. So FY25-26, do we expect the ethanol to continue to remain higher as in the proportion to sales? Similar percentage?
Ethanol will be higher only, but the coming year the sugar sales will be little higher than the ethanol sales.
Okay, so the margins might go back to the previous average.
Well, there will be some impact, but not to the previous level.
Okay. Thank you. And last question, what is the order book that we have currently?
That's a 1,000 crore plus kind of order book.
Sorry?
More than 1,000 crore order book.
Oh, thank you.
Thank you.
Thank you. The next question is from the line of Sunil Shah from SRE PMS. Please go ahead.
Yeah, thanks for the opportunity. Sir, Kpr has been one of our portfolio companies for more than 10 years. Sir, just if I observe the way in which we have grown, from just pure yarn to fabric, then to value-added garments. But in the last 3 years, our EBITDA has been in that range of 1,300 crore mark, and PAT has been in the range of about 800 crore mark. Now our top line has grown, from 4,800 to 6,000 crores, etc. But our EBITDA margins have come down. Sir, I want to understand, is there any structural issue which is causing this kind of thing? Because 3 years in a row, we have not seen, EBITDA consolidate or PAT consolidate. Now, Europe is a challenge where, about 60% of our revenue or exports is coming through China. US is about 20%. So I want to understand, is there anything from the demand side or is there anything from extra new competition? Why are we consolidating at this level? If you could explain this or make me understand this much better.
Basically, if you look at the textile industry as a whole, in 2023, 22-23 and 23-24 is facing a margin pressure in all fronts. Especially yarn is facing a very tough scenario, and margins used to be somewhere around 17-18%. Now it is somewhere around 10-12%. So the margin pressure from the yarn front causing a reduction in the EBITDA percentage, and we were able to pull it on because if you look at the spinning companies, they are having a very tough time. Because of our integral strength and the fully integrated business model, we were able to maintain the profitability even though in the tough times. Otherwise, the margin pressure is there in every segment because the yarn, from yarn to garment, every stage we have a margin pressure. Because of this integration and unique manufacturing setups, we were able to pull it on. If the market is turned back, the things will improve substantially.
Okay. So we are seeing some challenges on the demand side. That's the reason why we are seeing this consolidation. And, what is it that is going to change, meaning going forward?
So basically, the yarn demand need to be improved from the present level to next level. And the garment demand also has to improve because we are being the large player, we were able to get orders and we produce more number of garments. But the small garment players are facing problems. In Tirupur, if you look at the order positions are more or less 30-40% lesser than the normal. So the demand for yarn has come down substantially. That resulted in lower margins in EBITDA for the yarn business. So those things need to be improved. Especially Tirupur being in network cluster of India, the market should improve. Then only the yarn prices will improve. The other business also will start improving, like fabric sales, dyeing and other things will improve. The overall market sentiments will improve.
So my one more point is that if we see this kind of, prolonged demand challenges, could we see many players winding up and moving out of the business, and then few successful, strong, integrated players will have better opportunity? Is that a reasonable assumption?
Could be possible, sir, but it is not entirely correct, because in the spinning industry, people investing a lot of money, so they can withhold for some time.
Okay. Globally, is China causing any challenges for us in terms of, providing these products to the European and the US market?
So China is coming as a competitor for yarn and fabric. They are selling it at a discounted prices in the market. That causes the yarn margins and the fabric margins.
All right. Fine, sir. Thanks for this, making me understand things better. Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask questions. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Sir, the margin pressure that you are seeing, is it because of the competitions or because the overall demand from our export country is muted? And just trying to understand what is causing this, margin pressure.
Margin pressure basically because of the lesser demand from the garment manufacturers, because yarn need to be sold to the end users, garment manufacturers, where the orders are all very low, so the demand is not there. Because of that, too many suppliers in the market for us, comparatively lesser buyers.
Yeah, that I understood. So the demand for garment, is it lesser in Tirupur because of the competition from Bangladesh and other Vietnam, or because the overall pie from Europe has shrunk?
The overall demand from Europe is getting affected because of this war.
Okay, so these things may improve as the situation in Europe.
It is slowly improving, sir.
Okay. So the things should be back to normal.
Yeah, back to normal. We hope so.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. The next question is from the line of Anush Kumar from Spark Asia Impact Managers. Please go ahead.
Hello. Good afternoon, sir. This is Anush. So I got a question, and my question is on FASO. So what is your aspirational target, sir, like 3 to 5 years down the line? What would be the contributions from FASO to the top line? And this is a different business to your existing core textile, which is more of a B2C business, and that could be cash burn. So with respect to addition, store addition as well as the employee costs. So what is your target in terms of on both top line and bottom line with respect to FASO?
So we have a target of about 100 crores in 3 years' time, and the stores and all not yet decided. Now we are operating on dealer model.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Yes, thank you. Good evening, sir.
Good.
So my first question on, we are generating quite some 600-700 crores of cash every year, and our capex plans, at least in the near term, doesn't seem to be so high. I mean, yes, we have increased dividend, but any plans for buyback or any What are you thinking about the further capital allocation from you?
Sir, just we are seeing the opportunity. If we get some opportunities, we will be utilizing it. Otherwise, we will decide the further course of action.
Right. So because even to put up a greenfield, I mean, like we did last time, greenfield garment capacity does not require so much capex. So unless you're putting that money in sugar, we might not require such large capex. So
that's what I am telling you. We are just waiting for some opportunity, because business we need to invest because it can generate a lot of money. So we are just waiting for some opportunity in the first half. We will decide what to do with the money.
Opportunities on the sugar side or textile garment?
Basically textiles. In case any opportunity comes in the other segments also, we will look at it.
Right. Fair enough. And sir, so yes, the realizations in garments are lower, but volume-wise, we have grown quite well this year. I mean, from 128 million to 150 odd. And this is despite US, Europe, not lifting as much volume as they used to do a year back, or the demand there not being as good. So, what is driving this growth for us? I mean, is it just new customers, or are we replacing someone? If you can just talk about how are we outperforming the end market in this?
Sir, being a large player in the segment, especially in the basic garment segment, we were able to compete with the others, because others are also having some issues. In the standalone garment units, they have to buy everything from outside. The margins comparatively lower. So the orders also, the big players wanted to place with the large manufacturers, so that the delivery time and the price competitiveness also will be good. That's why we were able to perform well. We are expecting that we will continue to perform well.
Great. Thank you and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. A reminder to all the participants, you may press star and 1 to ask question. A reminder to all the participants, you may press star and 1 to ask question. The next follow-up question is from the line of Vikas Jain from Kpr Capital. Please go ahead.
Sir, one question from my side. Given the fact that our cotton prices remains stable at current levels, garment realizations for the next year will largely remain at the same pace, or are there any value additions that we are doing in our overall offerings?
We already done all the value additions we proposed. So expected to be around this level only.
Around this level. All right, sir. Understood. Thank you so much.
Thank you.
Thank you. The next question is from the line of Dipen Shah, an individual investor. Please go ahead.
Yeah, good evening and thank you for the opportunity, sir. I had one question on the cotton side, sir. Could you just give us some more insights on how are the cotton prices currently in respect to the international prices? We are listening and hearing or maybe reading reports that international cotton prices have started coming down significantly. So what impact could it have on our cotton procurement, and what are our plans maybe over the next 2-3 quarters, sir? Thank you.
Sir, actually the cotton being agricultural commodity and seasonal, the new season will start from October. Already the mills would have purchased for this quarter, and the next quarter they may be purchasing it. The prices of international cotton prices are lesser by about 3-4% than the Indian prices. So the import duty is there. If we import the medium stable cottons from overseas, it costs about 5% more, 5.5% more because of the duty. So more or less the prices are in line with the Indian prices. We don't see much of traction in that.
Okay. So on an average for the current year, our cotton costs should be similar to the last year, sir? Around that much only?
The first half, so full year we cannot predict. The first half is expected to be the same.
Okay, it's expected to be the same. Okay, sir. Right, sir. Thank you so much and all the best.
Thank you. Thanks.
Thank you. A reminder to all the participants, you may press star and one to ask questions. A reminder to all the participants, you may press star and one to ask questions. The next question is from the line of Deepak from Sundaram Mutual Fund. Please go ahead.
Yeah. So just a follow-up question on garment. So could you please share what was the revenue from just the garment product sale and the incentives which we clocked for FY24?
Sir, incentive is somewhere around 7%, that includes 170 rupees.
So could you repeat again?
The incentive includes the 7%.
Yeah.
It is 170 rupees includes that 7% incentive.
No, sir, I'm asking what was our garment product sale, because I understand that in your garment you include your export incentives and some other income as well. I'm just asking what was the garment product sale which you report in your annual report.
Yeah, you send a mail, sir, and send it.
Okay. Thank you, sir.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to management for closing comments.
Thank you. Indian textile industry is expected to rebound in the current year on consistent improvement in the domestic demand, lower cotton prices, and gradual recovery in exports. With an ability to achieve impressive performance even in difficult market conditions, strategic diversification, adapt to changing market dynamics, and a focus on emerging opportunities, KPR stands well positioned to further expand its market share and maintain its consistent growth level. Thank you once again. Thank you all.
On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.